Llévate más de lo que esperas todos los días con el nuevo McValue en McDonald's. Ahora puedes comprar uno y sumarle otro por $1. Así que cuando tu equipo favorito enfrente a sus rivales, enfrenta tus antojos con $5 Meal Deals. Y si estás corriendo para alcanzar el desayuno, corre al app para llevarte ofertas antes del cutoff. Tú decides, y con McValue, tu decisión siempre rinde más. Precios y participación pueden variar. BOGO $1 válido para un producto de igual o menor valor. Debe estar registrado en Rewards para ofertas en el app.
Reality radio for a really great future. We're talking real money.
Their complaint is not whether or not they're securities. They call it in their complaint a Ponzi scheme, a blatant Ponzi scheme. And if what they say is true, and he used $326 million that wasn't derived from the sale or income from properties in the portfolio to pay investors back, then in fact it meets the definition of a Ponzi scheme. If he was using the fund's assets to pay a return to his investors, that's a Ponzi scheme. It hasn't been proven yet. It hasn't been proven.
I don't think he was, but if that's proven, which has not been proven, that would be a Ponzi scheme. I agree.
Now, let me ask you here. I said I wasn't going to go back to Woodbridge, but I'm going to go back to it one more time. Let's assume for a moment it turns out to be a Ponzi scheme, and you were recommending a Ponzi scheme and getting paid for it. Would you disgorge the money you made back to the investors who lost money because you recommended it to them?
Yes, I'd do that because I didn't think there was anything wrong. I did as much due diligence as I possibly could. And as I said, people were actually getting, good returns for many, many years. And so I did as much due diligence as I possibly could. And
Jordan Goodman, ladies and gentlemen, that's that last voice you heard on a podcast we did in June.
Okay, I didn't know how long ago it was, yeah.
Yeah, we did the show in June, and it is up online, by the way, at Talking Real Money. The podcast title is Advice Gone Bad, or you can find it at Apple Podcasts or any of the podcast services. We asked Jordan Goodman, if this turns out to be a Ponzi scheme, would you give your money back? And he said yes.
And we're talking about Woodbridge here, where $1.2 billion was taken in an apparent Ponzi scheme. How much of that?
No. It is now. They've admitted it was a Ponzi scheme.
And the question is how much we'll get back to the investors. I think that's still up in the air.
Yeah.
Jordan Goodman is somebody we have known for many years and had interviewed, as long as 20 years ago, 25, a long time ago.
I interviewed him almost as many as 30 years ago.
Yeah, I mean, held himself out, and I guess you'd have to say was a journalist. He was on Fox News, CNN, The
Money
View,
Magazine,
et cetera, talking about, that he was America's money answers man. And then he started, and you alluded to this, like, I want to say almost 20 years ago. Yeah, you said, every time Jordan's on, Jordan's got something that he mentions that you really got to go do. And you always said, I think maybe he's getting paid for that.
Yeah, because I'm a cynic.
I don't know that he ever really said he was, but anyway, in this case.
No, he has never once disclosed that he was getting paid for these recommendations.
Yeah,
never.
So he ran around the last few years telling people that they should put money into Woodbridge because it provided a safe 6 to 8% a year return. Turns out that was not the case, and we just learned, I think on Friday, maybe Thursday or Friday, that Jordan has settled with the Securities and Exchange Commission for his role in what they say is helping Woodbridge raise $147 million of that money.
Yeah, they called him an unlicensed security salesman.
And he got paid. I mean, here's the part that this is a staggering number to me. Frankly, he's a guy who's been in the business a long time.
Tom, I've been on the radio for so long, and no one has ever offered me this kind of money to plug a product, ever.
And so feel free to call. What is our number? 855-935-8255. $2.3 million. And so, I mean, at some level, I hear that, and I think Jordan should have said, wow, that's a lot of money to be paid to pitch this. I mean, really? $2.3 million? I think he should have smelled a rat, but I mean, he didn't, and you heard him right there, or maybe he did.
Do you think I honestly believe that he didn't smell a rat? Because he did that before, and he's done it since. He was even part of one of these limited partnership deals. He was a partner in one that was selling 11% real estate notes. These things, folks, these kinds of things cannot exist. I know we got a note this week from a guy. I heard one of these pitches for these notes that paid 10%, and I almost got into it. And then in the back of my head, I thought to myself, what would Tom and Don say?
Let me think. Don't do it, because it's always the almost guaranteed, or you're going to always get your money back, and then it doesn't pan out. So Jordan has agreed to pay I think it was a 2.3 plus interest.
Plus interest. Yeah. But here's the thing. You didn't hear him when Woodbridge actually pled this thing out and said, yes, we agree it was a Ponzi scheme. You didn't hear Jordan calling up people and saying, hey, can I cut you a check for part of that money? How much did you lose? No, he waited for the Securities and Exchange Commission to come drop a boulder on his head and say you're going to go to jail, or you can just pay the money back.
And he's now paid it, and we hope
he's
paid
it. He's agreed to pay it.
That's good.
We'll keep you updated. 855-935-TALK, our number.
Tom and Don are talking real money.
You know you need investing and financial advice to enjoy a better future, but you have no idea where to get it, right? The one thing you need most, you're probably missing, and that's a plan, because most of the financial services industry is concerned with making the next high commission sale instead of spending the time to understand your needs and fears. If you're looking for a 100% pure fiduciary, and we'll put that in writing, low-cost, fee-only advisor who puts you first, give Vestory a call at 800-386-3004. That's 800-386-3004, or visit us online at vestory.com.
For your real life and real future, Tom and Don are talking real money.
That number again is 855-935-TALK. Give us a call before you do something that could destroy not just your current financial situation, but your future.
And I'm gonna go out on a limb and just say happy holidays, everybody, because normally we don't do type of shows around holidays. But we hope you all have a great holiday, and don't fret about it. You made a great point last week, and I did go listen to the podcast while I was sitting on the deck in 83 degrees. Listen to the podcast, and you made a good point that sitting around and worrying about this doesn't make it a whole lot better either.
It doesn't.
It really doesn't. I mean, so sorry. It's best to ignore it. So
you have no impact, and trust me, even though you said, "Oh, I feel in my gut this market is going to go down," and you didn't do anything, you really didn't know anything. No. You really didn't miss out. Do what you've been doing, unless it's totally wrong, and then stop doing it. Do something else.
Yeah, have a discipline. Stick with it. Yeah.
By the way, last chance. Give us a call at 855-935-TALK, and you will get a brand new free copy of the brand new edition of Financial Physics, the book about how money and investing really work. Absolutely free, no obligation. Give us a call, 855-935-TALK. And next is Jim. Jim, welcome to Talking Real Money.
Hey, Jim, how can we help you today?
Yes, sir. I want to ask, how safe are money markets? I'm getting 2.35, and I have quite a bit in there, that's why. And I usually buy CDs, but I got out of one that was paying over 5.5, so I put it in the money market. It was a long-term CD, but I'm waiting for interest rates to come up. Do you think they're going to come up very high?
Okay, we're going to answer the second question first. We don't know anything more about the future of interest rates than you do, than Jim Cramer does, than Jeffrey Gundlach does.
Which means nothing. Nobody knows what interest rates are going to do.
So set that one aside.
Our opinion doesn't matter.
Okay, but to the first point, how safe are money markets? Don?
Very.
Yeah.
Extraordinarily safe. Money market accounts at a bank are absolutely safe because they are guaranteed by the Federal Deposit Insurance Corporation. Money market mutual funds with most of the major mutual fund companies are pretty darn safe. We can't say they're 100% safe because there have been a couple of instances where they, quote, broke the buck, dropped below $1 per share value, but only by a penny or two.
And if you're looking for the best rates for any of that, I would go to bankrate.com, right?
By the way, the rate you have, Jim, is excellent. 2 1/3 on a money market is great, but you are trying to time the bond market. That cannot be done. They will not ring a bell and go, Jim, this is the peak of interest rates. Move your money in. You're never going to know. You can't play this game. You need to diversify even your 100% safe money by having some in the money fund for emergencies and then having some in a 1-year CD, 2-year CD, 3-year CD, ladder those out, or just go and buy a really good short intermediate term government bond fund through Vanguard or someone, and as rates rise, those rates in those funds adjust.
I think that's sage advice. 2.35 is
all I have.
Very good rate.
Very good rate. 855-935-TALK is a very good number, too. Give us a call on it. And, Robert, you're next. Welcome to Talking Real Money.
Hi, Robert.
Hey, good afternoon. How you guys doing?
We're doing great. Happy holidays to you.
And Merry Christmas back at you.
Love to hear it.
I have a question. I retired within the last year, and my company is having some struggles, and I understand that my pension is covered by the Pension Benefit Guarantee Corporation. And should the company, declare bankruptcy, I really don't understand the Pension Benefit Guarantee Corporation, and I was wondering if you guys knew anything about it.
Well, it is a federal agency. It is designed. Every company that has a pension pays something into it. And the idea here is exactly what you just said. Should the company go bankrupt, be unable to meet its pension obligations, that sort of insurance fund pays you out. Now, that said, it will not pay 100% of that. In fact, we've seen airline pilots that I think got 1/3 of what they were expected to get. So it is not a guarantee of your entire benefit. No, correct. So,
and the other thing is the Pension Benefit Guarantee Fund is actually insurance.
Yeah.
So there isn't actually a 100% government guarantee of solvency, although they
fund it.
It's very likely over your lifetime to remain solvent unless a lot of companies fail. But you are not guaranteed 100% of your benefit. So this is why, good luck. I mean, it's great that you have a pension.
Absolutely.
That's wonderful.
Yep.
But we all, no matter what the situation with our company might be, we need to make sure we've got diversification in our future income, too, by investing outside of the pension.
Does that help?
We are, it does. We are definitely, invested outside the pension, and I figured that should it pay out, it would definitely, not be what I would be or what I am getting. Now, is there a time limit on that? I just can't see them paying it out, for the rest of my life.
No, they technically they claim that is what the benefit is. And bear in mind, there is a cap to the benefit. The highest the benefit can go, I believe, is right around, and I'm guessing on, it's really close, around $60,000 a year is the highest they can go. So right now they claim they'll pay it for the rest of your life, as was promised by your pension plan.
There's been a little struggle with the Pension Benefit Guarantee I think it's called Corporation. Anyway, because it was underfunded for a time and they're paying out a lot, so sometimes you hear about whether or not that money will still be met. My take is yes, like Social Security, that would be one of the things that the government would continue to fund to make sure that if there was a shortfall, they would make up for that, because it's really, I think, hard, and it's happened to people that have a pension and they say, sorry, we're going to have to reduce that. We've seen this, I think, in Detroit and other municipalities, but I think you can count on it for a lifetime. I think what Don is saying, and correctly so, is you may not get the entire amount for that lifetime. So
they may, if they start to get into trouble, may lower the maximum benefit and say, well, we're going to have to reduce your benefit, but you should get it for life, unless the whole world falls apart, and then we're really not going to care very much.
Appreciate it.
Thanks, Robert. And by the way, in Larry Swedrow's new book, which we will talk about, which I read over the break, I wish he wouldn't do this. He says around financial planning into the future that you should consider the end, perhaps, of Social Security. Now, my take on that is, if that were to happen, that really would be a pitchforks and torches kind of thing at Washington, D.C., because so many people now, I think it's 8 out of 10, it is their entire retirement. So the idea that would somehow go away, I think they will make younger. I think if you're under the age of 50, it's likely you won't get it until 66 or 70. Yeah, 70, which makes sense because
even my full
longer.
retirement age, and I'm an old guy, is almost 67.
Yeah.
So.
And they've been trying to retire you for years.
Not going to happen. Can't get rid of me. Yeah,
Jordan Goodman on line 2. He'd love to chat with you about your retirement.
I'm like a bad cold. I'm hard to get rid of. You can't shake me. 855-935-TALK is our number. Back with more in a minute.
Tom and Don are talking real money.
I just recently created a new and massively improved interactive edition of Financial Physics on iBooks, but I don't want to leave out those without an Apple device, although no other platform offers their interactivity. I have, however, created a free static PDF version of Financial Physics with an F that you can get right now at TalkingRealMoney.com. That's TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Tired of high returns? Tired of dealing with those pesky salespeople that love your IRA? Yeah, call us up. We'll talk about the return shaver program we've got for you.
Oh, I got it. It's fitted with the skull shaver commercial that was on during the live show that none of you on the podcast heard.
Skull shaver. It just has a funny sound to it.
I still have enough hair that I am not resorting. But you know what you could tell? You could tell the demographic of a station when they're advertising for guys to shave their heads. Most guys start shaving their heads when they start going bald. Yeah. It's not exactly a look men go for unless there's no other choice.
Yeah. I have all my hair, but I hate the color of it. So.
Oh, you mean the gray?
That's blonde, actually.
The white?
So, that's not white.
White. If you grew a beard, you would be a great Santa.
You're just killing me. You're not making this a whole lot better. Let's put it that way.
Welcome back from Hawaii, dude.
Exactly.
855-935-TALK. You deserve it.
Yeah,
all right, Keith, you're up next. Welcome to Talking Real Money.
Hey, Keith. Keith, are you there?
You want to ask him?
I've got a Pat. I'm a Pat.
Pat, well, let's go to you.
Wow, we don't know who you are.
Well,
you're not on our list.
You go ahead, Pat. That's fine. We got you on the phone. How can we help you?
Well, I was just kind of curious. I'm an octogenarian, so there's not a lot in my future. There's more in my past.
Yeah.
And there's a lot of things I wish I had known in my past. I'd have done some stuff a little different. But I've got kids, of course, and grandkids and great-grandkids. And what I'd like to do, I just happened to get something off the computer about the Squirrel Manifesto, so they must be starting out kids fairly early. That was by Rick Edelman.
Rick Edelman, that's, the nuts become the whatever it is, the acorns becomes the nuts?
Yeah.
Yeah.
And I was just wondering what kind of books and at what ages you might suggest to bring a kid along.
Well, here's the problem with almost everything that's ever been written about investing is that it's terrible. It's just generally, particularly for kids. They have a few money books for kids, but they generally encourage them to put their allowance in a piggy bank, or then the next step is the stock market game.
Yeah.
Learn how to pick stocks, which is stupid and dangerous. I actually think the best thing you can do for a kid is to teach them by example. When they're young, fund a college plan for them through a 529. When they have a job, fund a Roth IRA every year for Christmas.
Yeah, I mean, so if your kids, I hope, are employed, but your grandkids and great-grandkids may be on their first job, if they have actual earned income, you could help them open a Roth IRA. I would go to Vanguard, and then
Acorns.
Acorns. That's right, because Acorns. Yeah. You just mentioned the squirrel. So I mean, you could do those things, and you could actually fund it. So, and then here's the thing I love about this: the 10 years down the road, they realize that much went in, but it's really now worth way more. So they learn the
That's
value.
That object lesson.
Yeah, rather than having them read a book on stocks and bonds and invest. I think I'm with Don. It's very hard to find something that's a good primer on all this kind of thing.
Although I think every, particularly like for bedtime reading, read them a chapter of Financial Physics because you'll be getting a free copy.
Nodding off very quickly.
It'll put them right to sleep, and then you can subliminally implant all of those messages in their head.
I wish we were more helpful, Pat. And by the way, congratulations on being an octogenarian. That's an achievement in and of itself.
I hope to make it.
No, I think it is.
I'm not counting on it. Although I didn't think I'd make 60 either, and look what happened.
Yeah, shockingly enough. So, congratulations on the kids, grandkids, and great grand. I mean, that to me, it makes it all great, man. I'm loving my grandkids, so it's a lot of fun. So I know you are too.
Wish I saw mine more.
That's true.
Kids, if any of you ever listen to my show or podcast, you'd know that I would love to see my grandchildren, kids.
That's a shocker.
They don't They don't listen. They pay no attention to me. 855-935-TALK.
Tom and Don are talking real money.
Just as there are basic laws that govern our physical world called physics with a PH, there are also basic rules and concepts that impact our finances and investments. I call them financial physics with an F. In fact, 8 years ago, I wrote a book about them. For years, I've wanted to create an interactive version of that book to help readers better understand the concepts. So, since it was time for an update, I turned financial physics with an F into a special interactive multimedia version only on iBooks. It's the only platform that allows that. Because I want everyone to have access to this information, I decided to give this version away. Yes, it's totally free. So if you have a compatible Apple device, go get your copy of the new interactive book, Financial Physics, on iBooks. It's totally free, and it's available right now in the iBooks store.
Reality radio for a really great future. We're talking real money.
Because it's really, really important. We want to help you live a better life, enjoy a brighter future, and not get ripped off all the time. 855-935-TALK is our phone number, 855-935-8255. And we actually do have Keith with us. Keith, welcome to Talking Real Money.
Happy holidays, Keith. How can we help you?
Yeah, thank you. Earlier you had a gentleman who, where he talked about working for Boeing and owning Boeing stock. A lot of us have either options or stock purchase plans. What percentage do you recommend that we have if we of our company's stock if we work there? Because I can see the risk on both sides.
Wait a minute. What's the other side of the risk?
Well, I mean, I can see the risk because if you lose the job, the stocks are going to go down. But obviously, I get a discount when I buy stocks from my purchase plan, and then my options. My strike price is less than what the current price is. So, should I divest myself of all of those as soon as I purchase them, or is there a percentage of my employer that would be relatively safe to keep on the chance that the company goes under, type of thing?
So my answer to that is no. Yes, you should sell those.
The amount you should keep is zero.
Yeah, and here's why, by the way. Boeing is a very fine company. We know that. We have a lot of clients who worked at Boeing and some that continue to work at Boeing. We love it. I used to get to interview the CEO of Boeing Commercial Airplanes. I think it's absolutely fantastic, as Don pointed out, the dominant airplane maker in the world. That said, what the academics are going to tell you is the expected return of Boeing stock is really what the S&P 500 provides over the long haul. And when you own an individual firm, you take massive more risk because, as you pointed out, Keith, that company could go away. So we would suggest as those become eligible for sale that you sell them, that then you put them in a diversified portfolio instead.
Okay. Absolutely. I concur.
My company isn't public yet, but we expect to go soon. And, I've already purchased some of my options so that I can maximize, reduce my taxes and all. But it was just a good point, and I just want to make sure I, had a good understanding of the risk involved with owning that, whether I keep it or whether I sell it when the chance comes. Thank you.
As long as you're comfortable with a risk of a 100% potential loss, then I guess you can, for fun, keep some stock. But otherwise, if it's a serious investment for your long-term future, even the nuke stock, once it goes public, out, selling it.
Yeah.
Thanks for the call.
Yeah, good one.
855-935-TALK, our phone number, 855-935-8255. Mark, it's your turn. Welcome to the show.
Hello, Mark.
Hi, guys. Yeah, hi. Hey, I just had a thought on 2 callers ago, the octogenarian who was looking for some information for his kids and grandkids. And, one of your fellow travelers, I guess, Paul Merriman, I'm on his mailing list, and I check his website pretty often. But I just noticed over the last couple of years, his focus has really been towards educating young people. So I thought I'd just toss that in. That might be a good resource for that guy to go take a look at.
Yeah, Paul has spent more time in the last few years trying to get young people to do this right from the beginning. So I would concur. I don't know that he's actually, because I think the question was, is there a book? I don't think Paul's actually written a book for young people.
I was checking his website, but Paul, your website is down.
Uh-oh, really?
Yeah, his website
must be the shaver thing came and shaved it right off. No, so yes, Paul's done some great work, and we're not saying no one has done good work. The problem is finding something that really is palatable. I mean, something that a 15-year-old will actually sit down and read that would be interesting to them. There are young people that take an interest to all this. I could never get my young kids to do it. It just sort of went, Dad does this for a living, and he's making me do it because I need to know. But so yes, Paul Merriman's website is a very good one, and he has written more about young people. And by the way, calling us fellow travelers, doesn't that have like a communist sort of implication or something? That's something from the 50s or something? I don't know.
I'm not
just
that
saying,
old.
Mark. Okay, thanks for the call. Hope it's a great holiday for you.
855-935-TALK, the number, and we have a special holiday gift, a Christmas gift for you. Financial Physics, the book you could read to your kids. Maybe they could even read it. I don't know. Give us a call, 855-935-8255, if you need to ask a question or make a comment on the air.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
For your real life and real future, Tom and Don are talking real money.
You know, during the break, I've been looking for kids' money books, and boy, they're hard to come by. Oh, I want to give the number out again, though, before we talk about that. 855-935-TALK is our number, 855-935-8255, and we'll give you a free copy of a book that's for everybody, Financial Physics, How Money and Investing Really Work, the 2018 edition. You'll get that absolutely free. I did find a book, though, Tom, on Amazon.
Okay.
For kids, called How to Turn $100 into $1 Million. That is a terrible title.
In what period of time?
It doesn't say on the cover, so I decided to do some math.
How long does it take?
$100
7% a year.
I thought I was being generous at 10% per year.
Yeah, I think that's very generous because nobody basically makes 10%.
Oh, no,
a year.
let's use 12 since Dave Ramsey says you can do that.
Please.
Which is not true. But let's just say 12% per year. It would take you, hold on, almost had it. I just typed a bad number. That would take you 70 years? Yes, that is correct.
Okay, so,
No, 75 years. I'm sorry. 75.
Okay, but you could do that for a grandchild. Then you could put it in a trust, and you could put the $100. You could do $200. Right?
Yeah, but dude, that's at 12.
Yeah, nobody, I don't care what Dave Ramsey says, has made
let's say
and
8.
Likely to
let's
make.
Say 8.
Yeah, I think even that's aggressive, but okay.
And if you do 8 for 75 years, $100 would grow to be, ready?
Yeah.
$39,000.
Oh, okay. So forget it.
Nowhere near $1 million. What a misleading cover.
Yeah, that's a silly notion. Well, should we go back to the phones? Because it's either that or I'm going to start singing my favorite Christmas carols.
No.
It's really quite
phones.
up to you.
Absolutely phones. 855-935-TALK's the number. Absolutely.
Karen, you're bailing everybody out for my poor singing, so thank you for joining us. How can we help you?
Yes, I heard your answer to the octogenarian before, but my son is 25 and he asked for some stocks for Christmas. And I was looking online, and it said that a Roth IRA was the way to go for them. And I was looking at Betterment, but do you think that's okay, or a certain mix on Vanguard, like you were talking about before? Like maybe 50-50 of the two you were
Actually,
talking about before?
I want to throw another little twist into this. Mm-hmm. We mentioned Acorns, and we don't get anything back from Acorns, but Acorns builds these very interesting portfolios that are really close to what we would suggest for proper diversification, and it's already done for you. The program is called Acorns Later. But what you can do, how old is this child?
25.
Oh, 25. Yeah. Oh, this is an old child. Then what you can also do is have this child tie their bank account to that Acorns Later account. And what it will do is every time they make a purchase or pay a bill, it'll round up a couple of bucks and add additional monies to that IRA painlessly.
I absolutely love it because it requires no discipline from the person. No. The money it's gone. You don't have to write a check. You never have to sit down at the end of the month and go, am I going to pay the phone bill or am I going to put money away? It's taken care of. It goes into, as what Don just said, a very diversified portfolio at a very low cost. And then the money's there and it's growing for a young person. And by the way, here's another idea. Here's what you could do. Mm-hmm. You could, as a gift, if you want to do the gift, you could match whatever their contribution was for the year, for example.
Okay.
And then they're incentivized to round up a little bit more because you can set parameters around how much on each expenditure get rounded up. For example, in some cases, you could have a $4.75 purchase that was only rounded up to $5, so 25 cents is going into the account. You can make a bigger roundup, right, for a Don said a couple bucks. Yeah. And then at the end of the year or whatever, you could say, I will match whatever you put in there. I always found that to be a great program, too, to incentivize people.
It's almost magical.
It really
feels magical because when you spend a dollar, or you spend 90 cents and it rounds to $1, you don't even feel it's money you would throw away anyway. Practically, you lose the change, but then it becomes part of your future.
It
so
grows.
Cool.
It's better than being in a change drawer or a change bottle because in that case it's just sitting there losing to inflation. In this case, it's exposed to global stocks. And over time has made significant money. So I think that's a very good suggestion, Don. Yeah, and by the way, because you asked about this, I would not divide it between a couple of places. I think that makes it confusing. I would pick one or another personally because I think now you got two accounts, got to figure all that out. I'd pick one, and probably my favorite, again, like Don said, would be Acorns, and that doesn't have to be for retirement accounts either. That could be for anything.
No, it can. As a matter of fact, here's the deal with Acorns. They have their $1 a month plain Acorns account, or for $2 a month, you can have their core account and the later account, which is the IRA.
So one is money to be saved for retirement. The other would be for any
money
other
for
major
a rainy day
purchase. Correct. Yeah. In fact, I just cashed mine out and put it in my wife's retirement plan for this year. So
there you go.
Yeah.
Okay. Is that a Roth IRA?
You can do a Roth there.
Later?
Yep. Mm-hmm. Yep.
Okay.
Yep.
Okay.
It's very cool.
Great. That's what I'll do.
So
then.
just go to acorns.com and remember, everybody, we don't get one red cent from Acorns. We don't even get a pat on the back or a thanks for mentioning us.
That's okay.
Acorns.
We're over it. But thank you for listening and thank you for calling. I love the Roth IRA for a young person, again, because it gets all those decades of tax-free growth. And when you take the money out in retirement, you don't pay any taxes on any of that money. I think it's, for a young person, it's absolutely unbelievably great.
You know what else Acorns has now? They now have a thing called Acorns Spend, which is a checking account.
I got the email about that a few times.
I don't know enough about it.
Yeah, and it waters down the message to me because I think their message is good. Save something and invest it properly, and over time it will increase. That's a good message.
And you know the other thing that I found cool about being in Acorns is that every once in a while they'll send you a note called Found Money. And once I was going to buy something, I think it was at Apple, and they put like 5% of my purchase in my Acorns account.
Yeah, they have a bunch of people they work with that the retailers, or you could do that.
It was free money. Right. I went, I'll take free money.
Yeah, why wouldn't I do that?
I've never turned down free money, not once.
Okay, so a couple of program notes.
Oh, yeah. We're going to be off next week.
The first time since we've done this show.
Yeah.
So we're taking one Saturday off. We'll be right back in January. Number 2. Many of you take the week between Christmas and New Year's to kind of work on your finances. I did a little work on mine while I was out of town. And we still have the online appointment thing, right? People can go do that?
Yeah. I'm just too depressed to even do mine right now because it's the end of the year.
I'm worth less now than I was a year ago. Get over it. That's the way it goes. So that happens.
Yeah, absolutely. As a matter of fact, we really encourage you, and I want to make something real clear about this appointment thing. Because a lot of shows say, call us at the office.
Monday morning, yeah.
We really do. We've discussed this, and we have made these online appointments, or you can call our 800 number either way, but you can go online and set up an appointment to meet with one of our advisors. This is not a sales pitch.
And by the way, it's been very successful. We've had a lot of younger people who have come in and said, here, I'm doing this, and this. What do you think? Change that a little bit, do this, and be on your way.
And these are people who we know. By the way, we're not looking for everybody to become a client. That's not our goal.
Every other body to be a client.
Every other body. No, but here's the thing. Here's the reason we do it. Because our primary goal is to educate everyone we can touch about how to properly invest and to save them from themselves. And it's funny how this works. It ends up good for us.
And the other one, Retire Meet, coming up soon. So get your tickets for that too. That's.
I'll tell you more about that. Yep. I'll tell you more about that right after the break.
Tom and Don are talking real money.
Your number one financial goal must be retirement. As we live longer, our need for a substantial retirement nest egg has grown. That's why you must have a plan. And to help you map your route to a brighter future, I created Vestory's Better Retirement Guidebook. And you can get a free PDF copy right now at retirebetterbook.com. It's truly free and there is no obligation. So get your Better Retirement Guidebook now at retirebetterbook.com. retirebetterbook.com.
Your guides to a really great financial future. Tom and Don are talking real money.
5 years ago, we decided that there was a huge need for an event that covered all aspects of retirement. That's why we started Retire Meet, and it's coming up in February. This is our 5th annual. It always sells out. So give someone the gift of a financial future. Go to talkingrealmoney.com or retiremeet.com.
That the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.